All right, guys. In this lesson, we're going to be talking about emotions, setting up a trading style, setting up a trading plan. And a lot of you as new traders come into the whole trading field without not really necessarily a whole plan or a whole idea of what you guys are doing. And I mean, like anything, you're going to come into a new era of your life and you're going to be trying something new. There's always going to be better ways of improving yourself. Even me, there's scenarios where I come across a trade that stuns me a little bit, and I'm be like, okay, this one just go exactly how I planned. Now, being able to adapt to the market, adapting to the plans instead of letting the trade you, you're going to be coming out being profitable every time on the markets. You don't want this trade to hold your account down or take your account as hostage, so to speak, with a bag. And let your emotions do the entire deciding factor of trading. And emotions is really your worst enemy. It's a hard thing to overcome because you invest your hard-earned money in a trade and your emotions go with it, because you look at the dollar amounts you invest and you look at what it would be like in a day job, how long it would take you to make such and such, and then you lose such and such, and you let that emotion really bind up into the amount of money that you're putting in. It's kind of like, use trading as a business, so to speak. And you're going to have business losses, you're going to have business gains, and you want to be able to do things rationally for your business, so to speak. So I'm going to go ahead and get started. Trading with a skill set, trading with no emotion. When I just started trading on my own, I lost a little over $10,000 the second week. I had made the full-time jump and therefore was desperately emotional to make it work. Looking back now, I probably did things I would never do today. I pushed trades into the market when it wasn't a good time to trade. I let trades run up huge, losses without stops, and took any profit I got quickly. Okay, below is a great display of the difference between the retail traders on the top, right here, and the professional traders on the bottom. Notice how when the retail traders are screaming sell, the smart money is slowly buying and vice versa. Okay, let's say you got this guy on the phone here. This is the retail traders here on the top. This guy's like, I've got a good stock here that could really excel, and really excel, and everybody here sell. Okay, and it's a perfect example of the OTC. Everything is so fucked up, so to speak, because these idiots are screaming sell, and at the same time, smart money is going to be like, everybody's selling. Well, I'm going to buy the blood. I'm going to be buying this dip. I'm getting in a good entry. And you're buying, and what do you know? The idiots that sold are looking at all dumbfounded that they got out of this play because they read something wrong, or they believed a message board on iHub, or such and such is telling them. And as new traders, everybody looks up to someone or looks up to a subject that has profound to be a good profession in this trading career. And, people will look up to that, take their advice, will sometimes follow the wrong direction of some people giving bad advice. And it's easy to be misled by somebody, and you're taking their advice and you feel like it's good, and they're just because they're tweeting about it does that make that play a legit play to get into. We as guys on Twitter will push directions, will push advertising the plays that we're in, and we're pretty much alerting our rooms before we even alert Twitter. And, by the time Twitter gets it, yeah, they see it. Yeah, it can be a potential play for them. But sometimes you've got these guys that are pumping a play nonstop for days on end, and it's literally done run way too much. And it gets new people that don't know what they're doing into buying a potential sell-off or the high of the play, so to speak. So the whole idea when I put out my alerts is to get you guys in cheap. I don't like people chasing the play. You guys got in cheap. It's a good play. You can ride this wave potentially however high it may go. And doing price targets can be crucial because they could have gotten good news up here already and it's already ran, and all of a sudden they think it's sell the news. It happens a lot in OTC. I mean, TTCM was a play that had good news of an app release. And what do you know? A lot of people sold because that's what they were expecting for some reason. And, even though it's good news, you got to be able to determine when to sell the news and vice versa, and buy when, the selling is way oversold, so to speak. Because I like buying cheap and I like selling high. That's the whole advantage of making profitable trades. Now, the fear of missing out, FOMO, you guys may hear this word a lot. Here is the scenario. You've been sitting on the sidelines while watching this hot penny play rally nearly 100% off the day lows. Are you itching to jump in and buy? Are you frustrated because you're missing profits that others are making? And this happens a lot. You know, in OTC, we've got plays that are running several 100% in one day. And you build this FOMO thinking, okay, it's ran 200%, it's ran 300%. Why in hell won't it run at least 400 or 500%? I'm going to go ahead and chase in. Now, without realizing that could have been the top. That could have been, you know, the very top that you bought. And what do you know? It started selling off from then. But you still have got this inclination in your mind. Your emotions are telling you, well, you've already planned it before you bought it that it's going to go 400 or 500%. What if it never does go 400, 500%? You know, it could be crashing down. It could have been just a dip. You always look for those potential things, reading on the chart, knowing your support lines, and being able to enter that play properly. Many traders I've been talking to feel this way right now, and it's not uncommon. We all have watched the market rally much further than anyone expected, and it's not just the swing trader who feels this way. Day traders are feeling the heat as a trending market offers little entry opportunity. Enough though, it may be hard. Sitting on your hands can be one of the most difficult things a trader needs to learn. In fact, I really do feel like it's a requirement for a successful trade. One's lesson I learned quickly during my first few weeks trading at home. We have to treat trading like a business, not a hobby. And sometimes waiting for the right entry is part of the business. Now, let's just say you've got a business selling merchandise of some kind. You wouldn't go out there looking for the most expensive merchandise to try to resell for your store or for your website or whatever it is that your business would be selling, would you? I mean, you're not going out there and looking, oh man, this stuff is hot right now. It's on fire. It's up 300%. I'm going to go ahead and buy a whole bunch for my store and try to make a what? A 1% profit? 5% profit? You don't want to go out there and buy something so expensive and turn around and you got to sell it to your customers for a loss. I mean, you think of it that way. I mean, you want to get merchandise as cheap as possible and turn around and make it for a profit. That's the whole idea of trading. So sometimes I will let these runs run however freaking far they want to run because I'm better off not buying at that position because the risk factor is so great. I mean, the higher up the play goes, the more chance it is for me to lose money on that play. I mean, I'm not thinking about how much more it's going to run and go. I'm thinking about, man, it's ran 300%. That means it could fall 300%. And you will see plays like that, you know, go up a massive amount and go massive amount just straight down again. And you chase because of FOMO. And it's your emotions leading to you in that position to want to chase these plays, which I don't blame you. There's a lot of money there, and there's a reason that makes you want to, you know, run to it because that's where the money's at. And occasionally I'll do it if the catalyst is really strong and I feel like it's still a little bit early for it, and I might have a good 20 or 50%, you know, pop out of it or something. But my risk is going to be very, very high, okay? I'm going to be looking to get out at least break even, if not just, you know, a little bit of profit of some kind if I decide to day trade it, okay? People with PDT accounts or, you know, small accounts that can't just buy in and sell instantly in the same day repetitively, you have a much greater risk. So you don't want to chase those setups, so to speak, unless you can sell out the same day. So, you know, if you build your experience, it's something that you can do. But as a new trader, it's very, very, very risky. Treat trading like a business. After talking with some former traders whom I worked with, I realized I was doing one thing completely wrong. I was blindly waking up each day and trading with no real direction. How stupid of me, right? Sure, I had great trades in the past and knew what to do, but being at home was completely different than trading on the side. What helped me get over the hump was to treat trading like my own personal business, just like I was mentioning. I wrote a business plan and had a specific achievable goals and daily activities to keep my emotions out of the way. What this helped me do was to remove my emotions from the traditional fear and greed cycle. Now, when you come up with a plan, okay, for your trades, it's sometimes better just to get a pen and paper, write down what's your target entry price is for this play, what's your reason for getting in this play, what's your why you should buy this play, and what's an exit price that seems realistic for you to get out of this play. Now, you'll have a lot of these new guys coming here that want to buy and oh shit. Sorry, guys. I went through all that without was being mute. All right, let's go back. All right, after talking with some former traders whom I work with, I realized I was doing one thing completely wrong. I was blindly waking up each day and trading with no real direction. How stupid of me, right? Sure, I had great trades in the past and knew what to do, but being at home was completely different than trading on the side. What happened helped me get over the hump was to treat trading like my own personal business. I wrote a business plan, had specific achievable goals and daily activities to keep my emotions out of the way. What this helped me do was to remove my emotions from the traditional fear and greed cycle. Now, like I said, have you a piece of paper, write down your plan of trading, your plan of action, so to speak. This is your business plan. I'm going to entry at such and such price here, 1 to 5 ticks or so at an entry level. And I'm going to have a reason why I'm buying this play. I'm not just buying it because such and such on Twitter or iHub is telling me this is a great play. It's going to $10. It's going to make me a multimillionaire overnight. I mean, you got to have that reason why you want to buy this play. And that's really the most important reason is your why. You want to be in early before a catalyst, or there's a potential catalyst just out. It's gapping up and there's a reason why it should play, but you also got to look at the risk factors. Are they diluting? Is there some potential downside to it? And how is the chart looking? Does it look like it's been preloaded, weeks or so before this run? Like I said, an example is kind of TTCM. A lot of great news came out when that play was at its high, but it sold off because people were expecting that news. There was a reason they were expecting that news. So it sold off out of ridiculousness because it was great news, but that's when it triggered people to sell. So in this chart here, you got to get out of the whole FOMO situation as we were talking about. And we've got a price and our time here, and we've got this chart, and you're chasing this play. It's going up hundreds of percents or so for the day. Let's just an example. You decide to enter out of greed, okay? Just like I was talking about up here, where you feel like you're missing out on the play and the action. You decide to enter out of greed near resistance here, and all of a sudden, it could not break that resistance. Can you guys hear me?
Yeah, I can.
Okay. All right. I don't know. I keep getting a question why someone can't hear me. So anyway, as the play could not break through resistance, it came down to a panic, and all of a sudden you decide to exit on a panic on a downtrend. And in that sense, that was just a terrible trade. You entered here because you chased out of FOMO, and you exited out of panic. And what do you know? It bounces off support, which is my ideal entry. This exit here out of panic would have been my ideal entry. And it came up here, but let's say you did not sell out of panic and you decided, well, I'm going to sell out to break even. Well, it broke even. You got out of the play, you exited out of fear, and it broke through that resistance and continued going again. And that is a very typical scenario there. You're not looking to chase, but you're looking to find support to get into that play. If you do come across a play that shows extreme strength towards the reason of its run, and not just a pump, you got to have a reason for the run. It can't be just, a pump pretty much going on and it's just running off of nothing. So let's control those emotions. Productivity can be extremely helpful when starting to trade. If you're bored, then you're most likely to make stupid trades. If you are business searching, analyzing, reading, etc., then you're more likely to find amazing trades with great risk reward. And great risk reward, is, let's just say 1 versus 3. I want to have 3 chances that this is going to be great reward versus a 1 chance of it going bad against me. So sitting on your hands sometimes is the most best thing you can do sometimes. You've got $5,000, $10,000, hell, $50,000 just burning in your account, just waiting to go into something, and it's killing you. Don't be forcing yourself into the markets to want to just trade it just out of boredom, just out of, pure, I need to put this money in something and make something. And those times will end up causing you to lose the most amount of money because you're bored. You're trying to get in a trade that does not meet up to your criteria, so to speak. And it's good to have a plan for every single trade. There's got to be a plan of what trades work for you as well. You as new traders need to come up with a strategy that these trades I've made money on, and you go back and you look at those trades, and there's a reason why each one of those trades made money for you, and you're going to be looking for setups with similar reasoning or activity behind it. The three most common emotions traders experience. Some of the most common emotions traders experience including fear, nervousness, conviction, excitement, greed, or overconfidence. Okay, here we're going to talk about fear and nervousness. A common cause of fear is trading too big. Trading with improper size magnifies volatility unnecessarily and causes you to make mistakes you normally wouldn't make if you weren't under the stress of risking larger losses than normal. So, of course, the larger size you're going to go into this play just because you feel overly confident that it's going to be huge will cause you to stress. And it'll play with your emotions. It'll play with your fears of what ifs. And, sometimes it's best to just scale out. I mean, scale in with a small position or sizable position that's not going to make you emotionally unstable or fear or stress over that size, over that play. Some of these plays that I'm a little, leery about or a little cautious about sometimes, I'll put in a starter position, something that I'm not going to care in the world if it goes down 10, 15%. It's not going to really hurt me that much, but I've got my first hand in the door, so to speak. And as it comes down, the more excited I get because I want to add another, double that size, so to speak. Like sometimes, I break up my full position in 4 different positions, okay? 25%, 25%, 25%, 25%. So I put my hand in the door with a 25% position. It's not a huge position. It's something that does not make me stressed out or emotional about or anything. And as it comes down, but I still feel confident on my why for this play, then I'll add another 25% because the lower it gets, the better my average is going to keep getting. And I keep filling in my position larger and larger. Sometimes if you feel like, well, I think it's going to crash down a lot, I'm going to go ahead and exit my play and go ahead and pull out that little position or those little losses and wait for it to come down to another support line. And then I'm going to enter in again. So it's pretty much, instead of riding the wave down, so to speak, you're exited, you're safeguarding those capitals and you're waiting for it to kind of descend and then enter in your starter position, or let's just say 50% of your ideal full position. And if it seems to just kind of hold that area very strongly, then go ahead and add your remaining 50%. But don't overstress it. Don't overthink it. You come into the motion of trading and those setups that work for you, and you put those position sizes within reason. Another culprit for fear and nervousness is that you're in the wrong trade, meaning one doesn't fit your trading plan. That's a big one. You've gotten to this trade, you don't know why, but it doesn't fit your plan, but you got in it because such and such said to. Or there's a reason someone on Twitter or someone in a chat room or something signaled to you to want to buy it. You got to play those plays. If you're not comfortable playing those plays, don't play those plays. Don't be nervous about your position. And we as traders will have a little, gut feeling or anything that kind of comes our way to go ahead and take profits now, or don't play this play, or I bought this play, but I shouldn't have. I should have put it in something different. I should have put in this setup. This setup looks better. Sometimes it's better to have several setups in front of you and kind of pick the best one according to your judgment of knowledge with trading to get in that one over, just choosing one because you were bored and now you're nervous that you're in it. Conviction and excitement. Another form of emotion. Conviction and excitement are key emotions you will want to feed off, and you should feel these in every trade you enter. Conviction is the final piece of any good trade, and if you don't have a level of excitement or conviction, then there's a good chance you are not in the right trade for you. Sometimes there could be, you're overconfident in a trade. And for some reason, you feel so confident in it that you're going to hold it no matter what, and it becomes a bag. Like I was telling you earlier, have that trading plan for each one of these emotions or for each one of these trades. And you will exit out of that play and not be over cocky, overconfident, and you're just feeding off of the conviction, excitement of the play that you think you're in the most perfect thing in the world, and it's going to make you the next millionaire. You can't feed off of those emotions. You got to trade anything like you're completely oblivious to the play. You're in a good play. So let's just say you're in a good play and it continues to grow momentumly day over day, week over week. If you're holding long, those make us feel very comfortable sometimes. And as it continues to grow larger and larger and larger, we still got to have an exit plan. And an exit plan is sometimes the hardest thing to plan out. By right, we mean the correct trade according to your trading plan. Good trades can be losers just as bad trades can be winners. The idea is to keep yourself winning and losing on only good trades. Making sure you have conviction on a trade will help ensure this. So let's just say in this scenario, you've got, sometimes we're very convinced that this trade is perfect setup and it becomes a loser. It's generally better if those become losers than one that you felt nervous about and you slap yourself in the face like, oh, well, there's a reason I lost money in that play. I was nervous about it. It didn't fit my plan. But yet I went ahead and traded anyway because such and such was telling me it's a good play, or there was a why or a reason that kind of signaled, but it wasn't one that was set up to your standards. I feel much better losing on a trade that is a good trade according to my set of standards. And of course you want to keep those losses minimal, and take your profits, within reason, but keep those losses minimal, sometimes at break even or just below. Greed or overconfidence. If you find yourself only wanting to take trades that you deem as possible big winners, you could be getting greedy. Your greed may have been the result of doing well, but if you aren't careful, you may slip and end up in a drawdown. That happens a lot as new traders. You've got a good turning point. Things have really progressed, and every trade you get in just touches the gold pretty much. And all of a sudden you get into that big play and you decide, well, I'm going to go extra large my normal position. That right away is going to get you your nervousness, your fear, so to speak, because of extra large position size. But your greed is telling you, make it huge because I've been on this winning streak. Everything that touches is gold. And you get in that play, and it's those plays that will really turn you dumb real quick. It pretty much just sits you on your ass and tells you, no, this isn't your winning trade. And yet you'll be overconfident and you'll hold that thing down to a bag because you're so certain it's going to go 1,000%. And, example is the ball guy that we kind of make fun of sometimes, is he overhypes these plays and they become these massive bags. And he's got this whole train of people that literally just hold this bag to the ends of the earth because they're so overconfident and all they see is big dollar signs on a sub-penny play. It just doesn't happen that way all the time. It's so rare in the OTC you're ever going to find something that runs out of trips, that runs out of pennies, or ever even sees dollars for that matter. Always check that you're using proper trade mechanics, sticking to stops, targets, good risk management, good trade setups. Sloppy trading as a result of overconfidence can end a strong run. So let's just say this play did not meet your price target and you had a pretty outlandish price target, but it did not hit your price target and you were overconfident that this thing was going to go. And what do you know? It turns against you and goes down 100% of what the high was, or a 50% drop trend is one way to look at it. And it cut the price in half. And it's like, man, I had this overconfident, price target I could have sold at. And when it came down, I could have re-entered. I didn't take the profits because greed was holding me back because I was overconfident that it's going to hit this price target. It very well might hit that price target, but there's no guarantee. Taking your profits off the table is one of the biggest things you've got to learn in order to make profits compound over each other and continue the growth of your portfolio. My worst trades, and there have been a few of them, have all been when my best laid plans are thrown out the window, when I lose discipline, not having the proper discipline for your trades. I didn't use correct setups, stops. I thought I was better than the market. I doubled up when I was losing and lost more. I put more money into my trading account to chase my losses. I lost control of my emotions and traded when I should have locked or looked without any emotion at my position and cut them and moved on. Easy to say, difficult to do, but a must for any trader who's looking for long-term success. Now that's a very common thing. You've got these bags, but I'm going to lose them and completely ditch them without any emotion, cut them and move on. I have losses in my past, but I forget them literally, the next day. I mean, that I'm just starting a new day today. I forgot about my losses yesterday. I cut everything because it didn't fit according to my plan. But if you come to those areas where you had bad days, you threw your plan out the window, you didn't stick to your discipline, you're going to have your trades go against you. How to control emotions while trading. Top tips and strategies. Planning out your approach is key if you want to keep negative emotions out of your trading. The old adage, failing to plan is planning to fail, can really hold true in financial markets. As traders, there isn't just one way of being profitable. There are many strategies and approaches that can help traders accomplish their goals. But whatever is going to work for that person is often going to be a defined and systematic approach rather than one based on hunches. Create your personal rules. Setting your own rules to follow when you trade can help you control your emotions. Your rules might include setting risk-reward tolerance levels for entering and exiting your trades through profit targets and or stop losses. Trade the right market conditions. Staying away from market conditions which aren't ideal is also prudent. You'll have those days that are just slow as snot and there's nothing that's popping out on your news scanner or filings or nothing that's really setting up. Sometimes it's better just to look away from the computer and be like, tomorrow's a new day. Forcing money into a trade will always end up losing you most times than not when the market conditions aren't really set up to do so. Not trading when you aren't feeling it is a good idea. Don't look to the market to make you feel better. If you aren't up to trading, the simple solution may just be to step away. Lower your trade size. Example, on a $10,000 account, let's say that you bought an OTC pick at 0007 and the trade dropped to 0005. They have lost 30% of their position. Now they're down to $7,000. Okay, they put $10,000 on this trade. Now they're down to $7,000 in their account size. This is a huge loss, and while watching closely at your trades like a business is huge, if the play hit 10, they're sitting on a count of $13,000 with a $3,000 profit. In this case, the new trader has simply put themselves in a position in which the odds of success were simply not in their favor. Lowering the leverage can greatly help diminish the risk of such events happening in the future. Always trade small till you have mastered the key that works for you. They could have put $1,000 in here and lost $300 instead of $3,000, or they just chased the play and it was at 7 instead of 5 was the low of the day, 7 was the high of the day. And trip plays are the most dangerous because they're the most highly leveraged plays. So in a sense, on trip plays, especially with new traders, you've got to find that very bottom tick, bid sit it, never slap the ask, bid sit the hell out of it until someone dumps onto your bid. You feel confident in your trade, and then you can wait for 6, 7, 8, 9, or 10 as it continues. Establish a trading plan and trading journal. This is a big thing. In terms of fundamental factors, planning for various outcomes in the run-up to key news events may also be a strategy to bear in mind. The results between new traders using a trading plan and those who don't can be a substantial. Compiling of trading plan is the first step to attack the emotions of trading. But unfortunately, the trading plan will not completely obviate the effects of these emotions. Keeping every trade in a trading journal may also be helpful. Day traders must control their emotions. The slightest lapse in controlling your emotions will ruin your accumulated hard-earned profits overnight. For instance, after having several losses in a trading session, you are afraid of having a losing day. This fear spurs you to over-leverage and blow up your trading account within a single trade. So let's just say you've had a streak of losing trades, okay? The last 5 or 6 trades you've done have done nothing but kept losing money, and you just got out of it because, you chased the play, or this play just went against you because you didn't have a plan for it, or you didn't have no, specific whatever. And, we do have those losing streaks sometimes. Even me, sometimes I'll have occasional where, I did 2 or 3 trades in a day here and it just kept losing. I was like, oh, okay, well, I'm going to sit on my hands for the rest of the day. And, these plays are not just set up for what I'm used to trading. I'll keep my money for another day. In these scenarios, sometimes, when you finally think you found the perfect trade after a losing streak, you'll have some guy that over leverages, puts a ton of his money. He just puts his whole account in this play, and you can blow up your trading account with a 7th loss, so to speak. And what do you know? It just blew up your account in a single trade. How many times have you blown up your trading account because you lost control of your emotions? Furthermore, having your emotions on a roller coaster every day is not sustainable. You'll have those, ups and downs, and the trade is completely controlling your emotional reactions to whatever it's going. You're like, oh, why isn't the play going up today? Well, I don't know. It could be, the news is old. I mean, what's the reason that you're in the play? Are you waiting for news, or the news didn't come out, or there wasn't a reason for it to go green today? There could be a lot of factors to it. So that's kind of how I determine what play is going to be hot that day, is how fresh or recent a catalyst is going to be coming. And sometimes hype. It's kind of funny how hype has become a catalyst in a sense. If there's a ton of hype on a play, it's near bottom area, there's tons of eyes on it. There's something beneficial, something futuristic coming to this play. That'll drive a play to grab attention of traders wanting to get in before, the bread is made. Most day traders understand that trading is a game of probabilities. We know that we should control our emotions, stay detached from the results of each trade. We also have read dozens of trading maxims that sound like these. Don't marry the position. Don't marry your positions. Don't be affected by fear and greed. Be in the zone. While these straightforward statements are great reminders, they are of little practical value. This is because they do not show you the exact action to take when you're actually trading. Day trading requires focus. Day trading setups are fleeting. Hence, it is crucial for day traders to know exactly what to do to control their emotions while trading. They do not have a time to ponder on vague statements. What can you do exactly to control your emotions? Follow these 5 day trader tricks if you have problems controlling your emotions. Take a walk after each trade, even if it's just for a minute. Given the fast and furious nature of day trading, it is too easy to get trapped in the sea of emotions. Walking away from your trading screen is a deliberate break in your trading tempo. It is a physical action that you take to control your trading tempo. This is simple. Acts clears your mind and reminds you that you are in control. I mean, it's crucial to do this, especially in your early stages of making bad trades or good trades. Even good trades. You have a good winning trade, but you had a losing streak up to it. Then you finally have that, that one that just really made all those losses back. And you feel like you're in the groove. Oh man, I'm going to trade the next one that comes along because I've got this now. And you end up losing it all back again. Sometimes it's best to break up your trading tempo. Okay. Step away from that winning player, so to speak. Get outside, take a walk for a little while, come back. If you don't find that setup that's really, setting you up, then don't do it. But the excitement is obviously there, and you've got to be able to control it. The excitement is also emotions as well, just as much as bad emotions. Okay. There's good emotions and bad emotions. So those good emotions can make you over cocky or overconfident for the next play, and it ends up losing what you made that day. Vice versa. You had bad trade. You had this loss and you just kept playing and playing and playing and you kept losing. I'm like, you've got to break up that trading tempo and walk outside. Hell, take the day off. Do whatever it is that you do to preoccupy you from that situation and start fresh the next day. There's always the next day. Listening to music also helps you detach you from the market. That's kind of what I do sometimes. I will have my Pandora playing while I'm letting my scanner do its thing, while I'm watching my trades. I'm just listening to the music, and it's kind of not got me so involved with each trade. I've got a little bit out of the zone, so to speak, and it's helpful without emotions dealing with it. This play, I'm watching this chart. It goes down, 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 down. Okay, there's my risk. Sell. I'm out. No emotion, no attachment to the play. I'm looking at my scanner, waiting for the next setup. I don't see a setup. I don't see a setup. I don't see a setup. I'm not going to force my play for another setup unless I see one that fits my criteria of a play. The market does not drag you into a trade. Quite the opposite. You can walk away from the market anytime you want You are in control. Find out the least volatile hours of the trading session. Read a book during that hour. Let's say noontime. It seems to be the least volatile trading hour. Read a book sometimes. Step away from an hour. You had a good morning success. Either take the day off or take the session during that slow time to not be so focused on your profit loss. Oh man, this thing went down 2 ticks. I'm down $200. This thing shouldn't be doing that. You're emotionally so attached to each tick of your play, and it's not healthy. Most day trading strategies work best when price action is volatile. Trying to trade when a congested market leads to frustration, anger follows, then your emotional dam is pretty much broken. The easiest solution is take a break when the markets are going nowhere. Plus, you get to read the latest novel from your favorite author. However, do not read anything to do with trading. Trading books give you trading ideas. You might be tempted to try those ideas immediately. Trading ideas before becoming part of a consistent trading plans are losing propositions. Forex trades, you can use the Forex volatile. Okay, that's another calculator I had. So stop trading after 3 consecutive wins or losses. Number 3, 3 consecutive wins make you feel like a super trader. You think you cannot lose. You are invincible. You over-leveraged and overtrade. You over-leverage and you overtrade. So that can happen right there. Like I was saying, you have a good winning streak. All of a sudden, you feel like that next one, you're going to go all in. You're just going to go big because you've figured this thing out, and it can be some of your biggest losses doing so. 3 consecutive losses make you feel like a loser. You don't want to lose. Your emotions explode. You revenge trade. You have low self-esteem all of a sudden. That it can be like a hurtful thing, so to speak. Like, man, these plays just keep destroying me. I'm just losing all my hard-earned money. I'm just giving up trading. I mean, this trading is not for me. And you start nitpicking through different trades, and you start revenge trading. You're trying to find the quickest way to make your gains back, and that can be a crucial mistake. When a certain event happens for 3 times in a row, it is tough to not get affected by it. Let's evade this problem altogether and stop trading after 3 consecutive wins or losses. Don't look at your profit and loss while you are trading. I can hardly think of a figure that causes a greater surge of emotions than your profit and loss figure. To many traders, the profit and loss figure is an expression of their self-worth. Nope, you are greater than just your profit and your loss. If you follow the most important trading rule and have a daily loss limit in place, you are already protected from severe losses. Hence, you do not need to check your profit and loss figure constantly. Whenever you feel like peeping at your profit and loss for the session, read your trading rules. Ask yourself, am I scared? Fear is an intense and destructive emotion that traders often encounter. When you're watching your trades unfold, you keep asking yourself, am I scared? At any point, if you answer yes, exit immediately. Review your trading rules, reduce your trading size, repeat. You don't want to be scared of your trade. Master your emotions for long-term day trading success. Control over emotions does not give you a trading edge. This is because your trading edge depends on your trading method. However, you need to master your emotions for long-term trading success. With the 5 tricks above, your nerves will get a slow boat cruise instead of a roller coaster ride. Learning to control your emotions requires persistence. Over time, you will start to perceive the benefits of keeping your emotions under control. These benefits serve as positive reinforcement to your brain to continue good emotional habits and responses. It takes time, but if you persist, it does get easier. Okay, that covers the whole motion side, and now I'm going to be covering planning your trade and guidelines to kind of step for planning your trades. I don't want to take too much of you guys' time. Pretty much in this scenario here, you guys can read it over. I'm going to give you a hard copy of this as well. Pretty much is accepting responsibility for your trades. Focus on what made you successful. Practice in building confidence. Even starting small or even, paper trading. The final word on bouncing back after a big loss and planning your trades. Disaster avoidance 101. Trading is a business, so you have to treat it as such if you want to succeed. Reading some books, buying a charting program, opening a brokerage account, and starting to trade is not a business plan. It is a recipe for disaster. Once a trader knows where the market has potential to pause or reverse, they must then determine which one will be and act accordingly. A plan should be written in stone while you are trading, but subject to reevaluation once the market has closed. It changes with market conditions, adjusts as the trader's skill level improves. Each trader should write their own plan, taking into account their personal trading styles and goals. Using someone else's plan does not reflect your trading characteristics. So building your plan, knowing your skill assessment, mental preparation, set your risk level, set your goals, do your homework, trade preparation, set exit rules, set entry rules, keep excellent records of your trades, and perform a post-mortem. After each trading day, adding up the profit or loss is secondary to knowing the why and how. Write down your conclusions in your trading journal so you can reference them later. So like I was saying, treat this as a business. Be very thorough with it. Don't be haphazard as it. Be very in control of what you're doing. You're going to know the patterns that work for you, the patterns that don't work for you, and emotions are not taking over your trading style, so to speak. But I'm going to put a hard copy of this in the chat room. You guys can read over this some more if you like, or use it as material to look back or reflect on. I know this recording is kind of messed up a little bit because we had a little session there of blockchain out. But if you guys have any questions, I'm going to go ahead and stop the recording and open the mic for you guys.